Hey everyone, it is April 24th and I'm making my March recap video. So I'm a bit behind on the YouTube videos, but figured I would try to get it done. So 150,000 for the month of March. Very good month. I'm happy with it. Wanted to just go over a couple spots from March that were significant. One being WKEY. Which was my biggest trade, and I think may still be my biggest trade ever. It was a $22,000 trade, so I'm going to go into that. Essentially, WKEY turned into an NFT play, which is, new crypto related thing. It's been very hot, so it's been having big green day spikes and volatility. It's holding a range, so you get this range. Clean range, forming, consolidating over a few days or a week, and then you get a big surge and a breakout. And WKEY's been dropping PRs. They just drop a PR in the afternoon. They just keep doing it, and the market or that sector is hot enough that it just keeps pumping every PR, even though it's obvious it's just a pump. It really shouldn't react. Like, you'll see stocks that tend to put out PRs too often. Eventually the market's like, alright, we're tired of this. You guys put out PR every other day. It's not a big deal. And the market doesn't react to it. But WKEY, the market seems to just keep reacting to these PRs, even though it's pretty obvious what they're doing. And it's just because it's a hot sector. So the day that I played it was on the 26th. So after a big spike, you get a pullback for a full day. It's able to hold gains or hold that former support pretty well. And then coming into this day, it's like, okay, well, this is one of my kind of go-to patterns where it's a third day surge setup. So big spike, it'll come down, it'll form some good TA on this day, and then form an entry where it'll explode again, maybe test these highs, potentially even break out over it, even though that's very rare. That you don't see that too often, especially on a move this explosive. To get over that would be pretty surprising to me. In the morning, it was perking pre-market and comes down a bit and just starts exploding right out the gate. Now, I didn't catch this. I have trouble catching these things that explode the first minute, because I don't really like to buy the first minute. And if it starts exploding, well, now it's already kind of overextended. There's no area that I can really enter where I have a comfortable risk. So I just didn't play it. And I didn't play any of this either. I possibly could have taken something in here, but I just chose not to because it's overextended and these candles are high volatility candles. I prefer to enter lower volatility. So into the afternoon, you see this kind of perk. This perk was nice as far as it's reclaiming kind of the test. So this is like a complete breakdown where it's failed. There's no shot, there's no entry here. It's just, it could break down lower. It could, it's not very predictable. This double bottom comes in, and I think my first kind of scalp on this was 1560. The break out of this range to pop back up and retest these morning levels is what I was thinking. And then the plan was, as it breaks out of the morning levels, we're going to get that third day surge and possibly test the $20 area. It would just be a really nice play. Gets choppy in here, so I actually end up selling out somewhere in here. Got a small win. I re-entered this right here. So nice consolidation. It starts to curl. I re-entered this. I end up cutting it for a small loss. Okay, so I was expecting an explosion, and when it comes down like that, it's like, it's not really doing what I thought it would do. Let me just reevaluate. So I go ahead and reevaluate a double bottom triangle holds, which was my indication, okay, I can give it another shot. Entered in this area, 5,000 shares at 1603, was it? Something like that. And I do end up getting a nice perk pullback, which is fine. I mean, I've got my risk, and I'm going to stick to it. So that's not an issue for me. And then all of a sudden it just starts exploding. And that's when they dropped the news. So I knew there was a chance that I would get involved in this in the afternoon and I'd get lucky and hit one of their afternoon PRs that they have been dropping quite often. So basically I'm entering a nice zone where I might get a PR. It's a bullish TA. The multi-day is kind of like a setup I like. It's a hot sector. It's a stock that's kind of flowing how I like. And I feel like I can get these entries and have really controlled risk and potentially get a lot of reward. I got lucky with the PR, but there was a lot of other factors that lined up for this trade. And essentially, I would have never held it as long as I did, unless they dropped the PR. So if I don't get the PR, I'd probably sell it in this area, like the 18 area. But with the PR, I decided to get patient and just see, can I get a really nice bounce to kind of the $20 area? And sure enough, got the $20 breakout, and I didn't, at this point I'm just up so much money, I'm like, I really don't think this is going to make new highs on the multi-day. If it does, it's going to have to probably come down and consolidate and hold gains all afternoon, and then maybe get a late day push in power hour that I could have re-entered. In the short term, I felt it was optimal to lock in the gains, so I sold. I had a sitting limit at $20.95. I got out, I think, 1/4 of my position here. So I got the fill basically right at the top. And then as it came down, I'm like, oh man, like I'm just gonna dump it because I don't wanna get patient and lose a ton back. So I got the rest out at 2040, I believe. So my average exit was 2050, and that was 5,000 shares. So made $22,000 on this single entry, single exit trade. Best trade I've ever done, and in trading, luck is a big factor. I got lucky that they dropped a PR where they dropped it, but I also used knowledge and skill to get myself in the position to get lucky, right? So that's really what trading's all about. Yeah, that's a crazy move right there. And yeah, after that, you can see it just made a lower high. Wasn't able to even test those 2250 high. And then ever since then, it's just downtrended and gotten pretty ugly. So that's WKEY. The other play I wanted to talk about was FREQ. This is, a play I was taking with some size. It's kind of a niche play. It's a style I like. It's kind of they get really bad news and it drops their stock overnight. So $35.50 to the $8 or $9 area. It's a very big drop. So the idea behind this is that, possibly if the market panics too hard, they might actually oversell it on the bad news, and potentially the stock is then undervalued because of the panic. And then you can get some really nice bounces and kind of fill the gap. And occasionally you'll see some really insane squeezes. I wouldn't really even say this was very good. I thought it could have been a lot better. Anyways, you can see it makes a wedge and breaks out of it and then starts to hold a range. And I really liked that, and I thought, okay, it can break out of this range, retest kind of this day, break out of the 1105 and then try to fill some of this gap, which is, it's exactly what it did. Let's see, so I played it a few times. Let's see, this was the main play. 5,000 at 894, 5,000 at 9, and then I sold it at 946 because I definitely wasn't going to swing that. Way too risky to swing trade that. So that's the play that I nailed on it for a really solid win. Now, this is kind of going over a mistake because, I kind of got burnt out on the name and I missed the big day that I was looking for. So, this was on the 7th. Okay, so this is actually April 7th, but the play kind of originated in March, so I'll just count it as a March play. So anyways, you can see in the morning had an uptrend. There's definitely see an entry zone, kind of like this area. I could get involved here and just risk kind of this 10 level. Really good risk reward for a trend play. Finds a nice uptrend, and then you just get multiple entry zones. Just multiple different entry zones that lead to some really nice scalps. And I just didn't take any of them, so that's on me. It's just sometimes you know what's coming, you prepare for it, but you might be early, you might get burnt out on it, you might be ready to move on a little too quickly before that play is even finished, and you might be on to the next thing, and you might miss the thing that you were camping for like a week or two. So that's kind of what happened here. So on those days that I was taking it with size, like 10,000 shares around 9, I was looking for this move. I was looking for that multi-dollar move. I was going for a home run. I really did think I could nail it for $20, $30, $40, $50,000 potentially. And on this day, it was definitely doable. If I got involved in the morning, took some size, I could have really let that trend just play out and give the few hours, and could have nailed it for 20, 30,000. It's all right. I miss plays all the time. It's just part of the game. Opportunities come and go. Sometimes you miss them. So those were probably the most interesting spots that I can remember from March. Overall, I think I did all right. 150,000 in a month. Of course, that's great, right? That's great. I can always push to be better and do better. But yeah, super happy with it. So that's gonna be it for the March recap. Just a couple spots, that were on my head. And I'll see you on the next one. Thanks for watching.